Oil prices have started the day with losses. Investors are locking in profits after yesterday's rally, which has resulted in the increase in Brent and WTI by 1.6% and 2% respectively. The general upswing in global markets has contributed to this. Risk appetite improved after the release of the US macroeconomic statistics, which had exceeded the forecasts of market players. Investors were also encouraged by the news that the US entered a phase 3 clinical trial designed to evaluate if an investigational vaccine could prevent symptomatic coronavirus disease. Meanwhile, the daily number of COVID-19 infections is growing, thereby raising risks for the economic recovery and the demand for oil. There's significant evidence that supply and demand balancing has slowed down due to the new wave of coronavirus. Apart from that, according to market participants, OPEC Plus members have chosen the wrong time to ease oil output cuts. This prevents the quotes from growing further and contributes to their downward correction. Investors fear that increased production may reverse the recent recovery in the energy market. Brent crude oil futures contract for October corrected slightly after yesterday's growth. North Sea crude was down by 0.29% to $44.02 per barrel. The nearest WTI crude oil futures contract showed a similar trend pattern. In midday session, US crude oil was trading at $40.80. In general, Brent continues to trade in a narrow range, consolidating in the area of $43–44 per barrel. So far, there are no factors that can unbalance the price. Today, the market is expected to focus on the data on US crude oil inventories from the API. The Department of Energy is set to present an official report tomorrow. Industry statistics is likely to drive oil quotes. The ruble is trying to regain some of its previous losses. The Russian currency managed to move away from the 74 mark against the US dollar. The oil market contributed partially to the currency's movement. In the early session, the ruble was trading at 73.35 per dollar, which lost 0.33%. Thus, the dollar-ruble pair returned to the support level of 73.10. Today, sellers are unlikely to dare to test it. Of course, if they manage to lower the price below 73 rubles, the pair is likely to make a technical correction to the level of 72.30. The external background is quite negative. The energy market with Brent, which has retreated from yesterday's high, may exert some downward pressure on the ruble. In addition, weaker analog currencies are expected to affect the Russian currency as well. So today, the dollar-ruble pair will most likely consolidate in the area of 72.90, 73.30. In case market sentiment in the external markets deteriorates, the greenback may try to regain some of yesterday's losses. On Monday, it lost 1.8% against the ruble. That's all for now. Thank you for watching and stay tuned.